Hello, my name is Rob Newman and I am one of the partners at Carter, Collins & Meyer, a firm of accountants in North Manchester, working with established businesses across Greater Manchester, Lancashire and Cheshire. And the title of today's video is How to Sell a Contractor Business. Well, I'm going to ruin that video straight away and say you can't, because it is so difficult if it's a pure contractor business. Now, there's going to be a few things that I'm going to talk about further down that will caveat that. But the initial thing that I wanted to actually bring up is how to exit a contractor business. By contractor business, I mean anything that is a service that you deliver personally, without other staff, or maybe with just some subcontractors that you're using on a casual basis. If it's a service that you are doing based on your skill set and your knowledge and what's in your head, it's very difficult on the whole to get out of. There's a few that immediately come to mind. One in my own profession. My own profession has lots and lots of sole practitioners within it. In fact, over the last 20 years, the growth of accountancy firms has been extraordinary. We've gone from about 20,000 firms in the UK to about 40,000 firms in the UK, most of which are one-man bands. Literally, a guy sat in a bedroom producing sets of accounts. The other one, similar vein to that, is financial advisors. Lots and lots of one-man band financial advisors and a very sellable, sticky customer base that can often be sold. Dentistry, opticians, they exist. But I'm thinking of somebody that's doing a particular type of thing. You've got a skill set in X and it's just you and you're just doing that. Well, exiting from it is in some respects dead easy. You give up, you close down. But in another way, how do you actually do that? Well, I think the planning for that is a long-term process and is something you have to think about from the earliest of days. It's even if it is something that's sticky, a statistic that always comes back to my mind, having done literally hundreds of deals over the last 30 years, is 80% of all businesses listed for sale never actually sell. Indeed, at any one point, I have a list of probably 50 or 60 businesses that I know of for sale within my own customer base, and most of those just are not saleable because they really are a job in the way that I've been describing. And nobody really wants to pay you for that job. They want to pay you for a process. If you go and buy a McDonald's restaurant, a McDonald's franchise, what you actually get is about 12 books. What you're buying is a process, a way of going about selling burgers. And to sell any form of business, that's what you're actually selling. The future cash flow arising from a process. So if you are a one-man band contractor, you're somebody in a personal service company, you're falling into and out of IR35, and you're thinking, how the heck do I ever retire? Well, unless you can create some sort of infrastructure around yourself with others underneath it, the chances are the business is not the way that you are going to be able to retire. The business is an accumulator of wealth for you. What you have to give thought to is that day rate that you manage to get, that sexy, exciting day rate. Let's be really super optimistic and say you're getting £5,000 a day. I know very few of those contracts exist anymore, but let's say you're on a substantial day rate. What you have to look at is treat it as that's not just income now, that's future income. Indeed, I have over my career worked with many sports professionals, and this is something that a lot of sports professionals overlook. They're getting a big salary, a big earnings, a big pot, a big prize fund now, but that's not just for now, that's for the life of their person. Because their playing professional career, their boxing career, their football career is that short. And what they get from 20 to 35 is meant to last them until they die. And it's the same thing I would say to you if you're in a personal service company. That day rate you're getting now is not something that you should consider as being there forever. It's a period of time. And a substantial part of it is going to have to be put aside in one form or another to fund your exit from that business. If indeed you do want to exit. There's lots of people, including myself, who say, well, I can never see me fully retiring. Not just financially, just what would I do with my life? The scope of what I do may change, but I still will want to do less hours and be less involved in it, which means I need something else going on. Well, one of the most obvious ways of funding this is pensions. I don't sell pensions. I'm not here to actually advise specifically on them, but from the tax point of view of pensions, if you're in a PSC, a personal service company, IR35 type business, and you're on a significant day rate, you really do need to look at making pension provision for yourself. Any competent advisor, any accountant will certainly guide you towards this, but the company through which you work can make the payment contribution. That contribution can be up to £60,000 a year and is a deduction from your corporation tax. You pay less tax because of it. It goes into a pot of wealth that's yours and you pay no tax on it until you draw it down. Now, that can be a straightforward personal pension where you pay it to some big pension company and they invest it for you, or it can be things like SIPs and SASs. I am a particular fan of SIPs. I have to say, self-invested personal pensions are something that I particularly rate because you get to control the underlying assets within it and you can make investments in things like commercial property. Commercial property, I think, is one of the best things that smaller businesses should look at doing, both property that they work in themselves or necessarily rent out to other people. Aside from those, you should look at things like, do I save in ISAs? Do I make loans to other companies that I control that allows me to then build up pots of other wealth? Now, the pots of wealth that you do is beyond the scope of this video. There can be all sorts of weird and wonderful things, and I've known people invest in anything from literally China teacups through to commercial property. Indeed, I have a client who has substantial holdings of teacups that they rent out to the movie industry. I also have a client that rents out watches. There is a significant store of value and wealth in the watch world, and it can be a particularly interesting thing if it's something that you enjoy doing. It can also be a way of funding retirements because that is part of their approach to doing it. And I know people that have invested in all sorts of weird and wonderful things. Personally, I'm not a fan of some of the more modern investments, some of the crypto type stuff, but if that's what works for you and you understand it and you know how it works, please do consider that as part of the portfolio, and certainly in the perspective of a PSC. Because if you are that PSC contractor, you have already stated that you value and seek independence. You value wanting to be out there on your own. Because if you didn't, you'd have taken a corporate job. You'd have taken a role within an organization that gave you the structure and gave you the route to retirement. Whereas by stepping outside of that and looking at that PSC route, you're going to have to, like everything else, create and build your own retirement and create and build your own assets on which to base this, even if that then allows you to do different forms of work on a smaller day-to-day basis. But you do need to give that thought, and you do need to consider what it is that you are going to do. You have to create a shape and a structure to it. Now, if you are fortunate enough that you are in a world where you can shape and structure the business to have value, great. As I say, some businesses can. Professional services often can be. Professional services like my own are often a pot of wealth in themselves, but only up to certain stages. And one of the ironies in professional services is it's often easier to sell a small professional service firm than it is a great big professional service firm. Indeed, the prices are often higher for small professional service firms because there's a bigger market for them and more people able to actually buy them and take them into things. And that is also something else to consider if you're looking at planning an exit, because even if you are able to build a recurring revenue stream and build something out that actually is saleable, who's it saleable to? All of those are discussions that need to be taking place long before you get there. If you're 18 months out from retirement and looking at this type of option, it's too late. Have these conversations early, have this plan in place. I can tell you your accountant wants to have these discussions with you. And if they don't, you are with the wrong accountant. I love having these sort of discussions over a cup of coffee with somebody. And I love challenging their assumptions of where they're going to get to. When I was 25, I was never going to stop working. At 53, I probably am not going to completely stop working. But I do see a point where I don't necessarily want to do 50 hours a week. And that's the type of conversation that's worth having earlier rather than later. If you do want to have that conversation with me, my name is Rob Newman. I am one of the partners at Carter, Collins & Meyer, and I'd be delighted to take you through some thoughts and processes on that. I work with businesses across Greater Manchester, Lancashire and Cheshire.